All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Friday, March 8th, 2019. Market pulling back here below the 200-day moving average after yesterday's dip. Got out of our final position this morning, which was UWT here. Gap down. I gave it a little bit of room to see if we'd get that pull back up here. And with the way the market is, and I didn't want to risk a slide here and taking too big of a loss, so I just got out of it. So we are currently in no positions. We've handled the pullback okay, but we're down now under the 200-day moving average. And, this is the spot now we talked about during the week. This is basically worst case scenario that we had talked about. That would be not being able to break 280 and breaking below the moving averages. So not good for the market. We'll see if the market can recover today. Otherwise, we stay out and wait to see what happens. We could potentially put on inverse ETF long, which is essentially shorting the market because we did cross below this level. My concern here, though, is we're a little extended to the downside on this pullback, so it's kind of a tough spot to enter shorts, 5 days into a pullback. So the ideal way is for it to consolidate and break down, or to bounce and fail, which is what we did through here when the market was tanking. So that's what we're going to look to potentially do. And then if the market recovers, we start going long again. And recovery would basically mean getting over these moving averages, especially the 200 right now. So Friday is a good day to sit back and do nothing, watch the market, head into the weekend without any positions if you've got some on with stops. The Q, same thing. IWM, same thing. Let's quickly go over potential inverse ETFs. So those of you who aren't familiar, if you go over SPY here, it would be SPXU. And you see here how this is curling up, the opposite of what the market is doing. So we would go long here. We could go SQQQ and same thing. And then TZA for the index ETFs. Also LABD for biotech, which we recently got out of. And then SOX S for semiconductors. So that's all I'm watching to do right now. If the market were to recover today by the end of the day and just run up here and get back over the 200-day moving average, it's not likely, but anything could happen. Then I would probably reverse it and take inverse longs, or just look at some of the stocks we've been trading or have had on our focus list. But that would be SPXL, TQQQ, TNA, and SOXL, and of course LABU. So we'll be watching for that as well. But keep it focused. Basically, focus the stocks we've been watching and index ETFs right now.